think it's a warm up to a call which I think PM Modi should
make finally,
make finally, or he may pick up actually from Trump. But the point is that even though the words are very thawing in nature, the U.S. officials continue to be very harsh on India, and that's something I think New Delhi is also taking note of. You have the U.S. Commerce Secretary talking about being very harsh at the next level of Russia's sanctions that come into play. All those things are at play there. But there are two things which are coming into play in this week. The one, possible Trump administration, going little slow on the kind of harsh words against India and others. But at the same time, the frustration against Russia is increasing. So that's also something to watch out for, because the US officials are talking about looking at additional measures for Russia, because Russia continues to be aggressive against Ukraine, and that's something which the Europe and US don't want, and US has been pushing Europe to put sanctions on Russian oil as well. So that's one thing. The second thing is the Japan thing, which is now turning out to be a little political uncertainty there. Prime Minister Ishiba, making an announcement of stepping down as a prime minister, and that's primarily because there's a discord within the party and the public, because one, he went ahead and gave nearly $500 million of investment commitment to US, and that too on a higher rate, which makes Japanese car companies incompetitive for in that market there, and that's something which is going to be worrying for the Asian market, because Japan, though Japanese markets has gone up, that's primarily because the view was that inflation was inching up, and so there would be a cut, there will be a hike in interest rate going forward. And so you saw the yen going up, and you saw the Japanese 10-year yield going up. That's something which is little. That's the reason why the Japanese market is up nearly 2% or so. So these two things are setting up the entire thing for us. And on the back of that, if you look at on Friday, the jobs report was much weaker, and that meant that the next week's Fed meet, we can see a cut coming in. So there are a couple of things aligning for us in that sense for going into trade today.
We are absolutely first hear about President Trump's kind of U-turn on India.
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
In fact, I just want to mark what the global setup as well is looking like. For the U.S. equity markets, the handover was a little lukewarm. I mean, we were mildly soft pretty much for the Dow, for the S&P, as well as the Nasdaq, so nothing really to take home from. Other than that, the Asian markets, like Sajid was just pointing out, Japan is actually holding up in the green. It's a solid 570-point move for the Japanese Nikkei. Periphery markets like Australia, a little bit soft, but Hong Kong is mildly in the green. There's, of course, Hong Kong is gearing up for a massive typhoon once again, and Shanghai is lying absolutely flat in trade. That said, let's talk about our markets and what is it that we have on our hands. And given that we are still net positive, Sajid, when it comes to the Nifty, at least if you look at the net move on the index level all through last week, we managed to hold up by over 1%. What's the setup looking like? Because now you've just got the festive season, or perhaps India-US in terms of a cue to look out for.
Last week we saw the Nifty index go up by nearly 1.3%, and the first week has been pretty good, and because there has been some optimism saying on the back of GST rate cut expectations and others, which is there, and that's one of the reasons why we have seen there. But the only outlier there was the Nifty IT, which fell last week, actually 1.5% there, and that's primarily because there are murmurs now that there could be tax Trump put services tax. There's already, if you look at Senator Bernie Moreno's bill which is there, it's called the Halting Relocation of Employment Act, or Hire Act, which is there, and it creates a 25% tax on outsourcing payments. It creates domestic workforce fund to collect any money raised from the outsourcing tax, and it prohibits companies from deducting any outsourcing payment, which basically means that US clients will now start paying a tax if they are outsourcing a part of their work to any country outside the US. So it's basically
the cat amongst the pigeons.
Exactly.
So
Indian IT services, if you look at 50 to 60% of their revenues come from there. So it's basically a 25% cost increase, which is, it's just like a tariff which comes into play for services from that point of view. It's been tabled in the Senate. We don't know whether it gets passed or not, but it's still a caution or red flag which comes into play, saying that okay, it's going to be negative for Indian IT companies going forward who are working very closely with US clients overseas there. From a market's point of view, yes, we saw index going up, but foreign investors continue to be net sellers. 10 days continuous, they've sold nearly 14,000 odd crores, while DIs have been supportive of nearly 25,000 odd crores, which is there. But but the FNOQ is something which is very interesting, because we saw the overall put call ratio come down to nearly 0.77 there, and that's primarily because we saw some unwinding happening in lower levels of put, and closer to higher 24,800 and 24,900 calls have seen some kind of unwinding there. So that sets up the entire thing for us from a options point of view of between 24,700 and 25,000. Of course, if you look at the GIFT Nifty, it's already trading above 24,900 there. So there is going to be some kind of resistance which will come in at 800 and 900, 24,800 and 24,900 for us. FIs have been net short on Friday, 532 crores, and their open interest have also gone up to over 30,000 odd crores. And while in the Bank Nifty, it's been net long of 135 crores, and the open interest has risen to nearly 6,940 crores. So going into a trade, we are at a low of 7.43% with respect to the kind of long positions that FIs have on index. So it's almost 2 years low that we are looking at. So everything is tagged. If you ask, and we have Kunal here, he will tell us that with such low long positions, there is bound to be some kind of bounce back that could come in if going forward,
any positive
if news which is there.
So Kunal, we don't have control over news, but given the setup right now,